Have you ever pondered about the correlation between Bitcoin and other market assets? Today we delve into this intriguing subject. Bitcoin, as we know, is a decentralized digital currency free from the control of any central bank or government. It carries its unique characteristics such as limited supply and secure transaction methods. Now let's talk about market assets. These are a broad spectrum of financial instruments traded in the market. For instance, we have the DXY, which is an index of the value of the United States dollar relative to a basket of foreign currencies. Then we have the SP 500 and Nasdaq, which are stock market indices reflecting the performance of large companies listed on stock exchanges. We also have altcoins, which are cryptocurrencies other than Bitcoin. Our main topic of discussion is the correlation or inverse correlation between Bitcoin and these market assets. Correlation means that the prices move in the same direction, while inverse correlation means they move in opposite directions. The question is, does the price of Bitcoin move in tandem with these market assets, or does it move in the opposite direction? Understanding this relationship will give us insights into the dynamic financial world and how Bitcoin fits into it. To illustrate this correlation, let's examine a recent event: the collapse of Silicon Valley Bank in early 2023. The bank's failure was a shockwave in the financial market, with its effects reverberating across the globe. This was caused by a combination of factors such as widespread tech layoffs, rising interest rates, and a looming recession. The bank was eventually shut down by the California Department of Financial Protection and Innovation, and its assets were acquired by First Citizens Bank and AMP Trust Company. In the face of this banking crisis, an interesting phenomenon took place. Bitcoin, the decentralized digital currency, began to soar. As traditional banking institutions were grappling with financial instability, Bitcoin was thriving, demonstrating a clear inverse correlation. The more the banking system faltered, the more Bitcoin seemed to flourish. This event underscores how Bitcoin can serve as an alternative or hedge during traditional banking crises. What might the future hold for Bitcoin, especially if banking failures become more common? As we delve into this question, it's crucial to consider the growing attention Bitcoin could garner in the face of recurring banking crises. This digital asset, once on the financial fringes, may find itself thrust into the mainstream spotlight as a viable alternative to traditional banking systems. With banking failures like the Silicon Valley Bank crisis, trust in conventional financial institutions may wane, leading investors to seek refuge in decentralized alternatives such as Bitcoin. As this shift occurs, Bitcoin's correlation with other market assets like the DXY, SP 500, Nasdaq, and altcoins could significantly evolve. If Bitcoin becomes a mainstream asset, it could provide a hedge against economic uncertainty, much like gold has done in the past. This could lead to an inverse correlation with traditional market assets during periods of financial distress. On the other hand, if Bitcoin continues to be perceived as a risky asset, it could correlate more closely with other high-risk investments. As we continue to observe these trends, it's clear that the relationship between Bitcoin and other market assets is a pivotal aspect of modern financial analysis.